Fantastic. Okay, so I'll get started then. So, guys, I firstly wanted to say a very, very big thank you to Francis for having helped to organize this. And I'd also like to thank you all for joining this call today as well. What I'd like to basically do is I'm going to do a very short and brief presentation for you guys, a little bit about who we are, what we do, and how we've been able to help our clients, especially within the Africa and the Nigeria region more specifically. And then at the end, I'd like to basically welcome any questions that you guys do have. In between my presentation, there will be brief pauses I'll be making where I'll ask if there's any questions. So feel free to ask me any questions at that point also as well, okay? So to start with, I'm just going to share my screen. Please let me know when you can see my screen. And there we go. I'm just sharing it now. Let me know when you can see my screen, please.
Yeah, I can see it.
Excellent. Oh, and I'm just going to enlarge the screen as well. And there you go. So it's a full presentation for you there, okay? So, right. So I'll get started with the presentation itself, okay? So to start with, I'll just go through the agenda, which we'll go through. We're not going to go through necessarily all of this, but I'll go through some of the main basics. But actually, just before I do get started on this, can I ask you guys, was there a particular city that you guys had in mind, or are you looking for a generic general presentation on the UK, the different cities, and just to see where the opportunities currently rise?
Well, for me, I would say I don't really have anything in mind. I think anything good, any city where I can make good returns for my investments,
Yeah.
it's great. Yeah.
Okay.
Yeah, same,
Excellent.
nothing particular. Mm.
Perfect. So then there's two main cities that I'm going to cover with you guys today, which will be Birmingham and Manchester. Now, both of
Yeah.
those cities, when you see the presentation, you'll see why I'm covering both of them. But they are actually the two fastest growing cities in the UK at the moment, which are offering the best capital appreciation and the best rental yield. And I will give you a little bit of my opinion, but I believe that Manchester is actually just a little bit better than any other city in the UK at the moment. And you see it's just marginally better than Birmingham as well, okay? But again, I'll cover that and I'll let you guys make the judgment and ask me some questions at the end, and I'll be happy to answer them as well, okay? So I want to cover a little bit about who is Legacy. I'll talk about our turnkey solution, a little bit about the background of the buy-to-let market and an update from JLL. I'll also cover why Manchester, why Birmingham, our current developments, and we've got some new launches which aren't in this yet, but I'll cover those with you briefly. And then everything else I'll just leave for the time being anyway, okay? So I'll start by telling you a little bit about myself. My name's Hiran Naker, and I'm the managing director for Legacy. So basically, I've been based in Dubai for the last 13 years. I am actually born, bred, raised in the UK, spent all my life there, universities, colleges, everything as well. And I'm actually a UK qualified financial advisor as well by nature and also by my education. I manage and look after clients in the Middle East and within the Africa regions. I work with individuals as well as family offices throughout these regions. I do specializing in helping clients to build their property portfolios for their future, as well as for their legacy and succession planning as well. And we provide exceptional turnkey investments and a full service consultancy to international investors globally. So as a company, we are actually a global company, and we've been experienced since 2011. We've got clients in 4 different continents, and we do offer the full service from start to finish. Now, as you can see from this, you probably notice that Africa is probably my biggest region, where we've got clients all over Nigeria, Ghana, Zimbabwe, South Africa, and Kenya. Obviously, being Dubai based, we do have a lot of clients in the Middle East, but we also have a lot of clients in the Far East and Europe as well. So we're kind of like a global company in that one respect because of the amount of clients we have all over the world. Now, as a company, Legacy specializes in providing international clients with access to purchasing UK investment properties. The kind of properties are located in prime areas of leading UK cities, including London, Manchester, Birmingham, and Liverpool. Legacy works directly with leading property developers to offer a strong portfolio of luxury city centre properties. Investors can benefit from high rental yields and capital appreciation from their investments. Now, as a company, we do have three separate divisions. UK properties is our main division and pretty much our foundation as a company. But over the years, having worked so much with Africa, India, and China and other countries, one thing that came around was a lot of clients were looking for dual passports and citizenship. So we then set up Legacy Citizenship a few years ago, where we work with 14 governments from around the world, mainly Grenada, Bermuda, Antigua, St. Kitts, St. Lucia, Malta. We used to work with Portugal, Greece, Turkey, just to name but a few of the major countries that we work with. And we help clients to get a second passport or a dual nationality, which allows them visa-free travel around the world. And then thirdly, we've got our Dubai real estate division as well, where we're fully regulated by RERA in Dubai. And we have a lot of international clients wanting to tap into the Dubai real estate market, and we can help them with off-plan and ready complete developments as well. But today we're going to focus on the UK real estate side of things. So that's what we're going to focus on. So we're headquartered in the UAE here in Dubai, but we've got offices in the UK and in Spain also. I'm proud to say that we are also opening 2 new offices this year, one of them being in Turkey, and the second one probably in Lagos, with JTC, where we've got a very strong relationship with GD Taiwan Co. And we're also looking to open an office with them now in Nigeria as well. So hopefully giving a lot more confidence and peace of mind to our strength within the region of Nigeria. Legacy Investment Solutions has over 10 years industry experience advising upon UK residential property investment opportunities to global property investors. We offer our clients a very diverse portfolio to help them to tap into the UK property market, helping our clients to build a legacy with their property portfolios. We do deliver a trusted service from our clients across the Middle East, Africa, and the Far East that fully interrogates the opportunities that we introduce. And we do place our clients at the heart of our business. And it's a reputation that has built us a very loyal investor following. Most of our business actually comes from referrals and recommendations, to give you a bit of insight into that. Now, how do we exactly do this? Well, we do work with leading property developers in the UK. These developers must have a proven track record of having built, completed, and handed over thousands of apartments throughout the UK. But also, it's very important for us that they do have a minimum 10 years track record in the industry. So in short here, we don't just work with boutique or one-off builders or first-time builders. We only work with reputable developers with a proven track record, because for us, it's very important that what gets handed over to our clients is obviously the quality and everything that we have discussed with them. And that can only be done with developers who have got a proven track record of delivering quality, okay? Now, we work with UK developers. We've got projects, pretty much, we look at all the cities in the UK. And then after that, we look at the cities that are going to give the best capital appreciation and rental yields for their money to our clients. We only look at prime locations to achieve our clients the highest capital appreciation, the best rental yields, and we offer a complete hands-off turnkey solution for our clients from start to finish. And we also do work with leading mortgage providers and property management companies in the UK. So this is just giving you a bit of an overview of the UK itself. And if you know the UK relatively well, or even are familiar with it, you can see that this is what I call the UK, which is Manchester and the Northwest up here. This is Scotland, and I almost class Scotland as its own country because they've been trying to get their independence for so long. And this is Ireland here. So overall, you can see that actually the UK is a very, very small country. But on this side here, I deliberately put this showing you of the population growth in the UK since 1971. And as you can see from this, even in the last 50 years alone, you've seen a huge increase in the population of people. But what I'm trying to say on this particular graph here and this diagram is that the UK is a small island, growing population, and land is not something that you can grow. So basically, it's getting overpopulated, not even necessarily overpopulated, but the population keeps rising, but they've just not got enough land to keep on building, which means this is what is increasing, and property values always go up in the UK. when you buy them in the right locations. So it's very positive seeing the population growth and just how small the UK actually is as a country. So now I'm going to explain to you a little bit about our full turnkey services. As a company, the first thing we would do is what I call the investment consultation. Now, today, there's 3-4 of us here in the meeting or on this particular presentation. However, I do usually also do one-to-one meetings afterwards where we find the right city, the right location, and the right unit that would all fit within your budget. From there, we would introduce you to an independent panel of lawyers in the UK. Now, these lawyers do not work for me, they do not work for the developer. These lawyers will work independently for you. And what we call the exchange of contracts is actually done with them. Because any large sums of money coming into the UK has to go through lawyers, okay? But that's also there to protect you because the lawyers will do things like the KYC, know your client. They do the source of wealth. Where did your money come from? And also they do the AML checks, which is the anti-money laundering checks as well, because the UK is a very heavily regulated market. So they do have to know where the money has come from. But then when you do make the payment to them, the money does go into an escrow account in the UK where it's completely safe and guarding you and safe and secure. Now, after that, 6 months before completion, we will introduce you to mortgage lenders in the UK that will help you to get a mortgage in Africa. They do work, these are leading mortgage providers in the UK that do specialize in international lending for international clients. 3 months before completion, we will introduce you to the full property management services. This is a property management company in the UK that will basically help to get your property tenanted. They will manage your property and they will also maintain your property. And in the future, if you wish to sell your property, they will also help you to sell your property as well. So basically, you get full peace of mind sitting in Nigeria or Africa that you don't have to worry about your property. It will be looked after, tenanted and managed. We will also try to assist you with opening up UK bank accounts because in order to get a mortgage in the UK, you do need a UK bank account. Now, the good thing is we do work very closely with Access Bank and Zenith Bank, and this is the London UK division. So they can also open up the UK bank accounts for you guys if you already bank with them or if you decide to open up a new account with them. But there are other options we can assist you with as well. We will also help you with FX services if you've got euros, dollars, or any hard major currencies. Unfortunately, and I'm sure you can understand why, Naira is not one of those currencies I can assist with at the moment. I am always trying to find a solution for my clients in Nigeria, but sadly, at the moment, with the heavy devaluation, I am struggling. We will also help you with company formation and setup in the UK. This is for the clients that wish to basically buy multiple properties over a period of time. We can put the properties that you buy into a company formation, and there are certain benefits or tax benefits, etc., when you're buying multiple properties and building a property portfolio. We will also, this is for Dubai because we do Dubai stuff, but we can also help with investor and golden visa services. Now, a little bit, the last slide on this before we move on, was about the property management. A lot of clients say to me, look, Aaron, it's great, we bought a property, but how are we meant to make money from this property? Well, Legacy works with leading property management companies in the key regions in the UK. These companies provide a comprehensive lettings and management service, which allows you to enjoy all of the benefits of being a landlord, but with none of the hassle. By using Legacy, you can generate income from your home, which is a true turnkey investment. And the services that they provide you is basically, they do the full marketing and letting service. So basically, you don't pay for anything until they have a tenant ready to move in. They will do the full tenant referencing and check-in service. So they do the credit check, background check, and they'll even take the security deposits from the tenants to ensure that they are good quality tenants moving into your apartment. They will also help you with maintenance and snagging services. So basically, they'll send you videos, pictures, images, everything of your apartment showing that it's ready for the tenant to move into. So you know that it's in perfect condition before the tenant moves in. They'll also keep doing inspections throughout the tenancy to ensure that the tenant is looking after the apartment. They will do inventory checks for you as well. So even, for example, when a tenant leaves, if there's any damage or anything needs to be repainted, they take it out of the security deposit of the tenant. They basically put it into your apartment, ready for the next tenant to move into. They'll also assist you with non-resident landlord tax if there is any as well, okay? So as you can see from this, it is pretty much the full property management service that they offer. Now, before I move on to the next bit, when I talk about the market in the UK, which is the buy-to-let market, do you have any questions so far about who we are, what we do, or how we've been able to help our clients to build their property portfolios in the UK?
Yeah, I actually have a question. Okay,
Excellent.
so when you talked about the services, the turnkey services, you talked about the investment consultation. So I know that's done by you, Legacy, right? Then you said the
Correct.
lawyers, that's definitely not you, but then give us the link. The mortgage lenders is not you, you give us the link. The property and consult other folks to do that.
Sorry, the property management. Sorry, I think you got cut off when you were saying.
Oh, property management service.
Yes.
So is that, do you do that in Legacy, or would that be another company handling that for us, for example?
So most of the time, it's actually the developer who has the property management company, because the developers we work with, because they're building the whole site, they want to ensure that the communal areas have been looked after, managed, and maintained. So most of the time, most of our developers we work with have their own internal property management company. So that means you do get the best level of service. So it's basically the developer's property management company.
Okay, that's one. Then my second question is around what you described. I know you are talking about developers. So your approach seems to be the one where we are buying into, what's that called? I know there's a word for it now, but then it's not like a completed building. It's not like the building is ready to let and you're just paying mortgage. It seems to be like there will be a plan, and maybe it will be completed in a year or two, kind of off plan. Thanks.
Yes,
Yeah.
that's right. It's off
Is
plan.
is
So
that the only one
basically,
you have?
no, we've got a good mix. We've got a lot of developments. We've got probably around 10 projects at the moment in the UK. We do have some ready complete. And they, in fact, two of my developments also have tenants already in there. So you could be making an immediate rental income. Off
Yep.
plan is the more popular though, because there are a number of reasons why. So if you buy off plan, firstly, there's a lot of clients that want to spread their payments. They don't want to pay, for example, 80, 90, 100,000 pounds upfront in one go. So by buying an off plan, I have a payment plan with some of the developers we work with. So as an example, you pay £2,000 reservation fee, you pay 10% this year, you pay 10% next year, and then you pay 10% or 15% on completion. Okay. So we do help clients spread some of their payments. Now, that's one advantage. The second advantage is when you buy off plan, you're buying at today's price, but you're also buying below market price because it's an off plan property. And as you'll see in the coming slides, I'm going to show you, say, for example, in Manchester, property prices go up by around 7% a year at the moment. Okay. Now, if you buy off plan, that's about 18 months to 2 years away from completion, you're potentially making capital appreciation over the next 18 months to 2 years. But what that also does lead to is higher rental yields, because you bought the price, let's say, for example, 2024, but the development is completing in end of 2025. So by buying at today's price and below market price, when it completes, rents will have also gone up as well. So that is how you make higher rental yields by buying off plan, if that makes sense. So most investors and clients that buy properties of me tend to prefer off plan. Clients who tend to prefer buying ready complete are the ones who generally are, I would say, in a couple of years or maybe up to 5 years away from retirement. And what they want to do is they want to make sure that a rental income is coming in to replace
Yep.
the salary that they would not be getting anymore after they retire. But we do a mix for whatever clients require. We do have ready complete and off plan, in short, to answer your question.
Okay. Thank you.
My pleasure.
Right.
Any other questions so far?
No, I think the landlord taxes, do you have information around how that happens and what needs to be done?
Yes, so property management companies usually help you with the landlord, sorry, the income tax that you
Property
would,
tax.
but property tax that you may pay. Now, basically, in the UK, unlike many of the countries like the US and other countries, there is first and foremost a one-off initial charge, which is called stamp duty in the UK. That is a UK land registry data, sorry, registry tax that every person, whether you're a UK resident or whether you're an international buyer into the UK, has to pay. But that payment is paid at the completion, at the end, when you're taking handover of the keys of the apartment. Now, usually that percentage is based on the property value, but to give you an average, an approximate in between figure, it's about 4% of the property value is what you pay. Okay. Now, that is the one major, that's a one-off payment that you make at the end on completion and before handover of the keys. The only other tax that you potentially would ever pay in the UK is something called income tax. But everyone internationally or locally living in the UK have a threshold of £11,500 income that you can earn without paying any tax. So let me give you a very typical example. Let's say the first few years, your earning rental income is about 10,000 or 11,000 pounds. You pay zero tax. And then after a few years, because rent goes up in the UK every year as well, rent goes up to, let's say, 12,000 pounds. Okay. You will pay tax of 20% on 500 pounds. Okay. Because the first 11,500 pounds you earn a year, you do not pay any tax on. So anything above 11,500 pounds, you'll pay 20% tax on the difference. So in this instance, you'll pay 100 pounds tax a year if your rental income was 12,000 pounds.
Okay.
Okay, thank you.
No problem at all. So if there's no more questions, I'll go on to the next stage. Now I'm going to talk a little bit about the buy-to-let market in the UK. Now, if you guys know, hopefully JLL is a global company where they basically do statistics and figures on property all over the world. Okay, they do market evaluations, etc., etc. So they're pretty much a world-renowned company. Okay, so this is one of their latest reports that they did based on their reports that they expect between 2022 and 2026. Okay, so there's something called the Big Six, which is basically Birmingham, Manchester, Leeds, Glasgow, Edinburgh, and Bristol. These are pretty much the upcoming cities at the moment in the UK. Now, this is their statistics I'm going to show you. So investment in buy to rent, which is called BTR in the UK as well, in cities outside of London in 2022 surpassed the 5-year average of 69% with 2.9 billion funding with over 12,450 homes. Okay, Birmingham attracted the most investment of all regional cities for the second year running with 380 million funding, followed by Liverpool and Manchester at 244 million. Okay, now let me expand on this. The reason why Birmingham had the most amount of investment was because Birmingham is the second largest city in the UK, and they have got more land available for developments and projects than most of the cities. Okay, Liverpool is a very large city again, which is very underdeveloped. And then Manchester, which is starting to run very, very quickly out of land and space at the moment to be able to develop on. So that's why these countries, these cities had investments coming in at that rate because of available land and development. By the end of 2022, there were 96,700 buy-to-rent homes in regional cities. Now, that's not a very big number, considering the fact that the UK needs to build 300,000 new homes every single year to keep up with demand and the growing population. So only building just under 100,000 homes shows you a big shortage of homes in the UK. Birmingham having the largest market and development pipeline, and Manchester had the second largest market and the second largest operational market. Okay, so you can see on the graph here in terms of completed. So Manchester had the most amount of completed developments last year, but Birmingham not so much. But in terms of under construction, Birmingham had more than what Manchester did. And planning approved, Birmingham's got more than what Manchester has. So Manchester's showing quite a bit of a shortage there in planning approval. House prices have also gone shot up, but this is where you're going to see the difference. This is Manchester's house prices on a 5-year price growth. It's faster than any of the city there at the moment, as you can see from this graph. On a 3-year, also still faster than anyone. So it shows you some very, very good growth rate there. House prices across the big cities rose by 8% on average in 2022. Prices have risen by 20% in the last 5 years. Okay, so that's quite a lot of growth. So if you bought your property 5 years ago, it would have gone up by 20% in the last 5 years. Now, a little bit about the rental market. Mortgage rates rose significantly after the September mini budget, which you probably heard about in the news, pushing more people into the rental market because obviously mortgages were high, so people were willing to rent for longer and more people rented. With the end of Buy to Help in 2022, demand for rental property is very, very high. Okay, average rents across the big cities rose by 15.8% in the year at the end of December 2022. So that's showing you quite a lot of big growth there at the moment as well. Manchester saw the highest growth of 22%. Okay, now the forecast moving forward. The UK housing market has been bolstered by record low borrowing for the last 15 years. Unemployment is also at a near record low, and lending rules have become stricter, meaning fewer households have high loan-to-value mortgages. House prices in the major UK cities are expected to rise this year again, given by the demand from students and young working professionals. Okay, and there's an ongoing lack of homes to rent, resulting in increased demand for purpose-built rental homes. Why would you invest in the UK? Well, quite simply, this is a graph showing you, and this is, by the way, from the UK Land Registry data. So it's available for you to go and check as well, or go on the UK government website. This is showing you how property prices have gone up since 1965. And here, let me just outline a couple of big points. 1990 to 1995, we had the Persian Gulf War crisis. In 2007, we obviously had the Lehman Brothers global market crash and a recession globally. Even then, UK property prices only dipped slightly there, but then shot back up in 2010. But to bear in mind, the UK was the fastest recovery country in the world after the global market crash. And this all comes down to because the fact that there's not enough homes in the UK and population continues rising, and there's just not enough homes to go around for people to buy or rent. Okay, 2016, we had the Brexit situation where the UK announced their exit from the EU. A lot of people expected a lot of people to leave the UK and go back to Europe. Guess what? Nobody left. In fact, if you look back, the pound became stronger than it had been while being in the UK. And for over 10, 15 years, the pound was stronger against the dollar and the euro. And it's still a very strong currency even today. Even with the recession in the UK or inflation being high, it's still very, very strong. In 2020, we had COVID and the UK property prices still continued rising. So this, to give you a bit of peace of mind, showing you just how strong the UK property market is, even through recessions, even through global crisis, it's still a strong place to invest into where you know potentially you'll always make money. Now, a little bit about why Manchester. So we'll go into some statistics and figures. I won't show you this video for now, but I'll just go into the infrastructure. So basically, Manchester's had a lot of infrastructure into its basic city. Now, it does have the third largest international airport in the UK, flights to 255 destinations, including Nigeria, 22 million passengers each year, 1 billion expansion plans and 1,500 jobs created there. It also has the Metrolink, which is like the London Underground, which is a very well integrated system that goes all around Manchester and parts of Greater Manchester. It has 7 lines, 93 stops, and over 40 million passenger journeys a year. It's a big infrastructure project that Manchester invested into, but it takes you all around Manchester on a tram, even if you don't want to drive around. Population growth is quite good. Now, all of these statistics are from independent sources. Office for National Statistics is a government entity. Manchester City Council is obviously a government entity. And then you've got Deloitte. So basically, Office of National Statistics said that Manchester's population growth is actually double the national average. Okay, so that's big growth and population growth as a city. But Manchester City Council also said that Manchester's population is projected to increase by 70,000 people by 2025. So that's a huge amount of people coming into Manchester just in the next 1 to 2 years. But Deloitte said that even at the current rate of construction, Manchester is going to have a shortfall of at least 50,000 homes by 2025. So here is exactly where you're going to see your supply and demand imbalance, okay? So 70,000 people moving into Manchester over the next 1 to 2 years, but 50,000 home shortage in the next 1 to 2 years. That is just going to mean amazing rental rental income and good capital appreciation of your property, okay? So very, very positive statistics and numbers there. A little bit about the education there. So basically, Manchester students, there's about 99,000 going into the 4 major universities around Greater Manchester. A lot of international students go there, by the way, as well. But this statistic is very important to me. Basically, Manchester has a graduate retention rate of 70%. So 70% of the students that go to Manchester from all over the UK, they don't go back to their home cities. They actually stay and remain and get employed within Manchester, because in Manchester are the FTSE 100 companies, 85% of them are now in Manchester. So you've got companies like Deloitte, HSBC, Deutsche Bank, you've got KPMG, you've got the BBC, ITV, Bupa, just to name but a few of the major companies. Even Google and Amazon are now there as well, and big infrastructure projects going in there. They're all employing these graduates after they graduate, because they've all moved out of London because London overheads are so high and expensive. And there are about 22 universities within a 1-hour drive of Manchester. 383,000 students within a 1-hour drive of Manchester. So there's a lot of growth just from that you can see within that area as well. Okay, the 5-year forecast, according to Zoopla and also JLL, they're saying Manchester's growth rate is currently 7.4% capital appreciation per annum. And then you've got Birmingham in second place at 5.7, but London coming in all the way at 2.5%. So basically, Manchester is growing 3 times faster than what London's growth rate is. And they're expecting 26.8% house price growth in Manchester over the has been for the last 5 years. And then over here, you've got Manchester rental growth by 22% and Manchester house price growth by 2025 to be around 28.3%. So very, very strong figures there. Okay. Now, a little bit about job creation, because at the end of the day, it's all about jobs and going into that city. Centres for Cities is a government entity that ranks every single city in the UK based on population growth and the job growth. Now, as you can see from this, Manchester, the last 7 or 8 years running now, has been #1 city for population growth and job growth. Okay, and then you've got Birmingham at 3rd place, and all the way at number 20 is London. So it just gives you a very, very good idea of just how much population growth and job growth is happening in that particular area at the moment. And job growth and population growth obviously means good rental yields and high capital appreciation on your investment. Okay. Now, a little bit about the Greater Manchester area. As you can see within this, these are all the major cities within Greater Manchester. But we as a company are focused on these 3 areas, which is Salford, Trafford, and Manchester City Centre. So these 3 areas is where we have most of our developments, because this is where we are seeing highest capital appreciation and the best rental yields for your investment. There are currently over 2.8 million people living within the Greater Manchester area, circa 550,000 in the Manchester City area. So within that area there's 550,000 people, which is a big population. And then the main driver of the northern economy is the Manchester City area there. Okay, there are 1.5 million jobs just within this particular area as well. So good job growth and potential there. So just to summarize, annual house price growth is going to be over 7%. You're looking at annual rental growth at over 22%. On a 5-year forecast, 28.3% predicted growth on your property value. But over a 5-year rental value, you're going to get 21.6% as an average increase on your rental income as well. So it's very, very strong positive figures there for you to look at. A little bit about the rental growth. Manchester was the top rental market in 2021, with JLL Cities Index recording 22% growth in achieved in new rent developments. Average rents for a one-bedroom was about £1,172. Two beds are just under £1,500, and three beds are just over £2,100 per month. But prime rents had risen by 25%, with three beds seeing the highest growth of 33% and two beds at 22%. Now, the interesting statistic which I'll give you here, the reason why three beds saw the highest amount of growth was because in the UK, we've seen a slight rise in inflation. So what people have been doing over the last year to 18 months is a lot of co-sharing. So they rather rent a three-bedroom apartment between two friends or three friends and then split the rents. But that's happening quite strong or throughout the UK at the moment. So what you'll notice that nobody talks about studio apartments anymore, because studio apartments are not popular anymore at all, especially since COVID and the fact that lockdowns and things like that. So now what we always recommend to our clients is one beds, two beds, and if you've got the money in the budget, then three-bedroom apartments, basically, because they will get the highest rental yields and capital appreciation. A little bit about their economic growth. Manchester's GVA is basically gross value added was 67% since 2000. As you can see from this here, it's just showing you how much Manchester has grown over the years. But what you'll also notice, this is 2024 here. This is predicting up to 2035, and you're still going to see strong growth going up as we go along, basically, over the years. Okay, the economy is expected to produce 56 billion per annum by 2035, and per capita has risen by 34% since 2000 and expected to increase by a further 24% by 2035. So you can see that even investing into this particular area over the next 5, 10, 15 years, you should be expecting some very good capital appreciation and rental yields from your investments. Okay, now I'm going to go into Birmingham. But before I go to Birmingham, do you have any questions about Manchester, please?
No.
No? Pretty good? Okay, fantastic. So I'll move on to, sorry.
No, I don't have any question. Maybe my question would be around when you get to the projects that you have in Manchester, because I'd spoken to someone in Jide Taiwo earlier who said there was something around that Trafford. So again, I know you mentioned some work with Jide Taiwo companies. Again, I don't know if that's one of the projects that you currently handle.
Yes, so JTC are my exclusive real estate agents in Nigeria. I work very, very closely with the international director, who's also the owner's daughter, called Allow Me. So was that the person that you spoke to, or was it someone else?
Yes, I think so. Yeah, the
Allow
daughter.
Me. Yes, Allow Me. That's right. She's a very good friend of mine as well. Which development did she briefly mention to you, if you don't mind me asking?
Trafford Courts.
Trafford Gardens. Excellent. Yes, I'm going to show you Trafford Gardens in a few moments. That's on here. Yes, correct.
Okay.
So
Okay.
I'm going to now let me go into Birmingham in the meantime. So a little bit about their infrastructure. So Birmingham, they've had a little bit less inward investment because Manchester was 8 billion, sorry, but this is 6.2 billion. But Birmingham does have the second largest international airport, 150 destinations, 10 million passengers each year, 1,000 jobs created. It has a metro line, and also their infrastructure is not as big as the Manchester one, which has more lines and more passenger journeys per year. Okay, but it's still at least got the infrastructure in place. Their 5-year forecast is 5.7% capital appreciation year in, year out, 23.2% house price growth in Birmingham over the last 5 years. According to Zoopla, but there you're going to see an 18% rental growth by 2026 and 27% house price growth by 2026. Okay, so not as strong as Manchester, but still very strong figures and projections there. A little bit about their job creation, Centres for Cities again, but highlighting Birmingham there at number 3. As I already covered this bit with you for Manchester, so the principle still remains the same, but still very strong as a city. Okay, a little bit about Birmingham here. Annual house price growth is going to be 6% going up. Annual house price growth by 18%. A 5-year forecast at 23.2%, and then basically 5-year rental value forecast at 19.3%. So still showing you very good figures. So flat prices in the city centre rose by 27% over the last 5 years, with an average of 5.7% annual growth since June 2021. New build flats range from around 200,000 to 360,000 pounds from a 1-bed and 2-bed, which is very, very similar to Manchester. Prime new builds range from 280,000 to 400,000 pounds. Again, very, very similar to Manchester as well. Okay, increases in prime flats have risen by over 12% and 5% growth for 1 and 2 bedroom homes. Rental growth is still strong. Rental prices in Birmingham rose in the second half of 2022 as a result of supply and demand constraints, rising interest rates, and tougher lending conditions. 1-bed flat average rents from around £900 per calendar month at the end of the year, while 2 beds reach around £1,200, 16% and 20% rental growth respectively. Now, if you remember my previous slide on Manchester, those were higher rental income than what Birmingham is. That's why Birmingham rental yields are just a tad bit lower than Manchester. Doesn't mean it's a bad investment. It's still a very strong investment, but it's just a little bit less than what we are seeing in Manchester. Okay. Prime rents in the area also saw a substantial increase, with 1 beds averaging £1,400 per calendar month and 2 beds at about £1,900 per calendar month. Okay. Birmingham versus Manchester statistics. The city of Manchester has far fewer people than the city of Birmingham, but the broader metropolitan regions has similar populations, basically. So this is just showing you here Birmingham and Manchester. Manchester being the dark blue and Birmingham being the light blue. But when you look at the bigger part of the regions, they're very, very similar in terms of the population of both of those cities, okay? And then house prices in both Manchester and Birmingham are significantly below the national average, okay? This is, by the way, statistics from Knight Frank. So this is very strong statistics giving you actual figures. UK average prices are here. This is where they should be. But what you're seeing is that Birmingham and Manchester average prices are a lot below what the market rate should be. So this is where you're going to start seeing these two cities' prices rising faster and quicker to get more in line with the average UK property prices. So in short, you're buying below UK average market prices in these two cities, which is a strong indication of good capital appreciation and rental yields, as well as very strong profits for the future. Okay. Now, our current developments and opportunities. Oh, sorry, I think someone got cut off there. Hi, is everyone there?
I'm here.
Sorry, I think you got cut off, didn't you? I just let you back in. So don't worry, you haven't missed anything. You probably, the bit that you are looking for is this: current developments and opportunities. So what I'm going to do is now here show you what we have currently available. So if you're looking at Birmingham, we've got this development now. I will be honest. This was a presentation that I did in December to all the clients in Nigeria. Smithfield Lofts has actually now officially been sold out as of Monday this week, okay? So I'm not going to go into all the nitty-gritty on this, but we have just launched a brand new development in Birmingham called Southside Residences, which is right next door to Smithfield Lofts. To give you an idea, the quality of finishing were very similar to this, and the amount of units we have is 163. 1 bedrooms will be starting... Oh, sorry, just letting someone back in, sorry. 1 bedrooms will be starting around this sort of price, 267,000, and 2 beds are just around 300,000 and above, okay? 3 beds were completely sold out even then. So the new launch is going to be similar prices to this, limited availability. Now it's all already sold out, so I won't go into that. But what I will cover with you is the way we do our payment plan, even for the new Birmingham launch that we have, because it's from the same developer that we've been working with. Basically, with the Birmingham project, you're going to pay 5% as the reservation fee now, okay? To secure a unit, you pay 5%. Then after 6 months, so after full 6 months in August 2024, you'll pay 10% down payment then. Then after 12 months, so in August 2025, you'll pay another 10%. And then on completion in Q1 2026, you'll pay another 10%, which means you will have paid a total of 35% for the property spread over 2 years. And then you get a 65% loan to value mortgage in the UK. All right. So that's how, even on the new development launch we have, this is how the payment plan will be for Birmingham. Okay. Now, there's no point in me showing you these pictures because this is the development that's now sold out. But the interior finishing, you can see from this as a bit of an overview. This is what the interior finishing on the new launch also is going to look like. Very high quality finishing, high quality builds, because the kind of tenants we want for you are going to be executives and working professionals. Okay. Now, this is the development you were talking about, which is called Trafford Gardens in Manchester. We do have very limited availability. I must warn you, as of this morning, we only have 5 one-bedroom apartments left in this development, and the rest of them are 2 bedrooms. Okay, but even the 2 bedrooms are very well priced. Okay, we have done so well. We launched this development only 3 months ago, and we're almost sold out. Right now, we're technically 75% sold out. Okay, so a little bit about Trafford Gardens. Trafford Gardens is a new build development of striking design set to house a collection of only 116 apartments total, occupying a prime location in Manchester. This exciting property offers easy access to all of the world's class cities has to offer. This, by the way, is walking distance away from Manchester United Football Club. It's 1 mile away from Manchester University, and it's a 10-minute tram ride away from Media City, where the BBC, ITV, Bupa, and all these major companies are based. And it's a 10-minute tram ride away from the city centre of Manchester. By the way, the tram is only a 2-minute walk door to door. Okay, so it's in a very, very good location, this particular development. Tailored to meet the needs of rapid growing young professional population, Trafford Gardens offer generous living space, luxurious balconies on some of the apartments, and superior quality throughout. Ideal for homeowners or investors. This is a true rare opportunity. So this is what the development looks like. It's a brand new building. It's not an existing building, so a brand new build. Okay, it had 116 apartments. Studios are completely sold out, 1 beds. I've got to check what the latest price is, but they are starting from around 210. I know that all the 210,000 are sold. I think the starting price is around 220 for a 1-bedroom now, but 2 bedrooms, I think we have some still at around £250,000. And 3 beds, they're all sold out, by the way, already. But we have a very nice payment plan for this. So let me show you how the payment plan will work. You pay £2,000 reservation fee to secure a unit. Then over the next 30 days, you will start the legal process with the lawyers, as I mentioned earlier on. Then after 30 days, you will pay 10% in February 2024, minus the £2,000 reservation fee you already paid. And then after 6 months, you pay another 10%. And then on completion, next year, Q3 2025, you'll pay the balance of 15%. Okay, so you've got a nice spread out payment over the next 18 months on this particular development. Okay, so 10% now, 10% after 6 months, and 15% after technically 1 year. Okay. 65% loan to value mortgages available. So that's where you're paying 10, 10, 15, and the balance is that. So outside overview of Trafford Gardens, that's what it looks like. Another couple of pictures of it as well, showing you nice quality build, nice large garden landscape areas in the front as well, which is communal for every tenant that lives there. A little bit about the inside. This one comes with nice high quality finishing as well. By the way, one thing to mention, which I didn't mention before, all of our developments come with all white goods included. So they come with inbuilt fridge, freezers, dishwashers, washing machines, dishwasher dryers, washing machine dryers and everything as well. So they're all standard, okay, in all of our developments. So this is what the interior finishing would look like when it's completed, okay? So nice and high quality. big, large windows, letting in plenty of light and everything as well. So that is Trafford Gardens, guys. Now, I'm not going to go into Aspen, London, Canary Wharf because starting prices for this are £650,000 for a one bedroom, but it's London. Unless if you guys do want to know about London, but no, okay.
Nope, I'm not
So
interested. I don't know about
yeah,
others though.
no, no problem. Look, London is more of a postcode buy for those that have got, that traveling to the UK a lot and everything. But in terms of rental yields and capital appreciation, I wouldn't recommend London to anyone if you're looking as an investor personally. So that's just me giving you my genuine and honest advice on that. So that pretty much is a full overview, guys, of what we do and everything. So I'd like to welcome now any questions that you have. And if not, alternatively, I get Daniel to give you a call and then book in our one-to-one meetings for this week or early next week. But please ask me any questions you want. I'd like to answer whatever I can for you.
Okay. Thank you. Thank you so very much for the presentation. So the first question I have is actually around the I think the Smithfield that you shared earlier, the one that is sold out. At what point, and my question is around, at what point did you start the investment, and what were the prices when you started? So again, was this like 2 years ago? What was the value of the 1 bed, 2 bed? Has that value changed now that's
No,
okay?
no. So we only launched 3 months ago, Smithfield Lofts, and it got sold
Okay.
out within 3 months. Because this is what I was saying, that the demand for off-plan is through the roof because of the payment plans, flexibility, spreading your payments over a period of time, but also because when you buy off-plan, you're going to get a higher capital appreciation and rental yield. Also, when you buy ready complete now, you are limited with choice because everyone would have maybe bought the best units that were off plan on ready complete. Maybe you're just buying whatever's left over. But to give you an idea, prices you saw for Smithfield Lofts is what they were when we launched.
Okay. And
And the same
Trafford,
applies for Trafford, same as well. We've not done any
when was
price
Trafford
increases.
launched? I thought there was a name
Trafford,
for Trafford before they changed that to Trafford Gardens.
so Trafford Gardens was also just launched about 3 months ago.
Oh, okay. Okay.
Yeah, no problem.
Yeah, no problem.
And so I look, I've got what's your main interest, would you say? Do you think you're mainly looking for ready complete, or do you think you would prefer off plan?
So for me, I actually I think ready built, right? A complete building where I can have rental income as soon as possible. Of
Okay.
course, I would start to pay. I know the implication of the down payments and then the fact that I have mortgage immediately. But then the way I see the HOF plan is more of deferring when I will start earning income by another 2 years. I'm also deferring that mortgage repayment. Really, you mentioned it earlier, the exchange rates in Nigeria. 2-3 years ago, we were not at 1,300. 2-3 years
Right.
ago, it was 400. You can imagine someone who logged off plan at 400 or let's say 600 naira to £1, and now
Yeah.
having to pay 1,500 to make the same mortgage you could have started or maybe almost paid off.
Absolutely. Ask Frances. She bought from me 18 months ago. And she bought when the Naira was at 400, 500 Naira. And today,
Right.
look at where the Naira is. She is over the moon because she has made a huge saving. Even
Yeah.
if she sold her property today with the money she put as a down payment, she would have tripled her money if she converted it to Naira. So
Correct. Yeah.
and I've been telling people for years and years and years, buy, because look, one thing is, and I will tell you this open-heartedly as well. I'm an expert when it comes to Africa. I've been working within the Africa region for well over 12 years. Funnily enough, believe it or not, my whole family is from Nairobi, Kenya. Okay. So I know Africa. I'm very passionate about Africa. I understand the economical, but also more your political issues that you all go through as well. And I said to people, even 18 months ago, I said to them, trust me on one thing, that your market is going to be big problem because you've got a new president coming in next year. At that time, it was next year because I could see that they were going to have a change and everything as well. And lo and behold, sadly, look at where your exchange rate today is now. I know that the government's trying their best at the moment, so they've forward sold the oil to get income coming in now. They're trying to pay off the airlines. They're trying to reduce debt and everything like that. But sadly, as you already know, when your exchange rate is at 14, 15, 1500 to the pound or dollar, you know that that is not going to come down overnight. This, sadly,
Right.
for Africa, is going to become your norm for a while. Look at Zimbabwe. Typical example. Look at South Africa. South Africa is stronger in one respect. So I can't say much about South Africa. Their rand has still been devaluing, but it's still a stronger economy. But sadly, with Nigeria, I only see, and by the way, I have clients who are treasury directors of some of your top banks at the moment. They're clients of mine. I get a lot of their honest opinion and advice and everything. Where do they expect it to go? One of my clients, he works for CBN, Central Bank of Nigeria. I've asked his many a time opinion, and what he was telling me has all basically fruitioned to exactly where you are today. And sadly, I don't see the Naira becoming any better for the next 1, 2, 3 years. Okay. So my recommendation still to my clients now is still buy as quickly as you can. But not only that, think of it this way. Even if the Naira does become a little bit stronger over the next 1 year, 2 years, it's not going to be dramatic. But also, are you likely, if you're earning in sterling, in a hard currency, are you likely to want to convert that money to Naira? The answer is very, very unlikely, because it's your economy and your political stance there and everything as well that you have, that the Naira will never always be a strong region to always want to be investing into. So once you're invested in pounds and hard currency, you'll always keep your investments offshore for that reason. So then when you're buying pounds and then you're buying other investments in the future, your quid's in. You're going to be better off either way anyway.
Right, thanks. Tough decision. My other question is around the current state of the projects. So the Trafford Gardens, for example, where exactly is the developer in terms of the status of the project?
So well and truly underway. In fact, construction was started even before the launch of the units and apartments. Okay, construction's been going on for over 6 months, but we launched the product 3 months ago. So ground was well and truly broken. In fact, we as a company do not sell properties to any of our clients until ground is broken on any of our developments, because we don't ever want holdups or delays or anything of the sort. So we are actually waiting for the latest construction updates on Trafford Gardens, which we should be getting at the end of this month, which will be images, pictures, and all of that sort of thing of the actual site and development and everything as well. So we'll be launching that and releasing that to all of our clients by the end of this month, beginning of February as well.
Okay.
All right. Here, another one from me. So, in terms of what you would be paying, you said other than the fees, which is the breakdown you provided, right? So 5%, 10, 10, 10.
Yeah.
At delivery, okay, another 10 to make it 35. Then at delivery, you have the 4%, which is the statutory government tax, right?
Correct.
So between then and when you have a tenant in the property, what else do you pay?
So very good question. So first fee you'll pay after your reservation fee. The first fee you'll first pay is your solicitor fee. Your solicitor fee is approximately plus or minus £1,500. Okay. but that is to engage with the lawyers and for them to work and act on your behalf and do all the legal advice and everything, okay? After that, you're only paying your percentages of 5%, 10% or whatever. Now, the next fee after that is going to be really close to the end near completion. Now, if you decide to go down the mortgage route, you will pay a mortgage lender fee and mortgage broker fee. So once you've basically been accepted on the mortgage, you'll pay a small fee to the mortgage broker, which is around, I think it's 1% of the mortgage value. You'll pay that to them. Okay, and that's for them undertaking the mortgage process for you in the UK, and that's it. Other than that, nothing else in the stamp duty, basically.
Okay, all right. So the next time you pay is when you have a tenant. Other than so your mortgage payments, when do those start? When do you start paying?
So it's about a month after handover of the keys and completion of the development, okay? All mortgage lenders in the UK and internationally, they normally give you a 30 to 45-day grace period, correct? After you've started your mortgage. So it's not as though the day the mortgage starts, you make your first payment. So mortgages can only start after a development is completed and you've taken handover of the keys. But the property management company, 3 months before completion, will already be hunting and looking for a tenant. So the aim is the minute you take handover of the keys, there will be a tenant ready to move into your apartment. Fingers crossed, the objective would be that you would have received your first month's rental income first, and then your mortgage repayment would come out after that. So if all your dates align and work out, your tenant's already paid you, and then you're making your first mortgage payment.
Okay. Thank you. One other question. I have so many tax questions. Sorry. So you mentioned the US, right? In the US, there's a property tax, right, that you're required to pay to the city, yes, annually. So in the UK, does that exist?
No, you only pay the one-off stamp duty in the beginning, and that is it. You never ever have to pay stamp duty again until you buy the next property.
Okay. And then your income tax is anything above 11.5, just 20% of anything above 11.5. Okay.
Correct. So if your rental income was £12,000 in a year, you'll pay £100 tax for the whole year. But you will have made £12,000 income.
Okay. Well, thank you.
But then there are other fees, right? Apart from the tax, there's insurance, right?
That's if you want to take insurance. That's your prerogative. So insurance can be, if you wanted to take it, you can take something called tenant insurance, and that's about £200 to £240 for the whole year. But then again, that's not an obligatory thing that you have to do. That's off your own will if you want to take it.
Okay. But then you have to pay your agency fee for the property management, right? So just again, put in all the costs.
Sorry. So yeah, sorry, I wasn't aware you meant that as well included. Sorry, forgive me on that. So yes, obviously you have a property management fee, which is 10% of your rental income per annum, per month. So if your rental income is £1,000, you pay £100 to the property management company. The property management company will do everything. They find the tenant, they do the renewal notices, they inspect your property, they get your property repainted and replenish any furniture if it's damaged. If the electrics or boiler or anything doesn't work at in the middle of the night, they'll send the engineers out, fix it, everything like that. So basically, you don't pay for anything of that sort, okay? That's all covered in the property management fee. Sorry, forgive me on that. Then also, if you're going into the detail on it, there is also one other. If you're talking about from an income point of view, then there is something called a service charge. Now, the service charge is basically an annual fee that technically the tenant is covering, okay? It's basically for all of the communal areas, garden areas, and any, for example, the reception areas and stuff like that. It's just the maintenance of that area. Now, that varies from development to development. But on average, it's about £2 per square foot. So if you've got 500 square foot property, you're looking at £1,000 a year, which is about £100, or not even £100. It's about £80 per month equivalent you would pay for service fees, okay? And that again is paid to the property management company for managing, maintaining, and looking after the whole development itself, interior and exterior. Was there any other questions, guys?
Yes. So do you know what the current mortgage rate is?
So this is something I would be happy to talk to you about separately on a call. I do a one-to-one with you. But my honest advice and opinion to you is buy off plan. The reason why is because interest rates are still high at the moment in the UK. They are coming down. They have been coming down every other month for the last 6 months. But for Nigeria and for you, I will tell you now that you'll be looking at about 7 to 8% as an interest rate. Now, expectation is that interest rates are already coming down, have been coming down, and that by 2025, you'll be paying around 5.5%, which is same as what I would be paying, even for me. But right now, interest rates are high. But again, this was going to be a private conversation I would have with you, and I would probably recommend don't go for ready complete because you won't be happy with the interest rate right now. Okay.
Okay.
But by 2025, interest rates will be lower again. It's already Bank of England, I've already said it's going to be back down to the 2.5 to 3.5%. And by the time you look at international mortgage, you'll be paying about 5.5% roughly.
Okay.
So any other questions from anyone? No? Okay, so look, I've done a recording on this, guys. What I'm happy to do... Hi, sorry. Hi,
Yeah,
Victor? Yeah?
For the mortgage, for the mortgage, as a non-resident, how will the paperwork be processed as a non-resident?
Sorry, you were a little bit muffled there. I couldn't hear properly. For the mortgage as a non-UK resident, I got as far as that.
Yes.
What was the question?
Yes. How will the mortgage be processed?
So you can only get a UK mortgage. And I covered it earlier on. We work with all the international and major lenders that lend to the international market. So we have UK lenders that specialize in lending to the Africa market, Asia market, the Far East, and the Middle East market. Now, we also do work with Access Bank and Zenith Bank that also can get you a UK mortgage, because Access Bank and Zenith Bank have a London office and branch. So it'll be the UK lending division by them that will also lend and get you a mortgage as well. But we do have mortgage lenders that specialize in Nigeria market.
Thank you.
Any other questions, guys? Okay. So what I'm going to do, guys, is I'm going to get Daniel to give you a call maybe tomorrow and go through this, what we went through on the presentation, and potentially book you guys in for a one-to-one meeting with me for early next week, where I can talk about specific developments, specific questions, or anything in particular that you would like me to answer in person. What I'll also do is I'll try and get this particular video that I've recorded today sent across to you guys as well by tomorrow, so you can watch it over the next couple of days or over the weekend. But also feel free to share this with any friends, colleagues, or anyone else that you think would be interested in buying into the UK with me as well. I've hopefully demonstrated today the strong relationship that I have with Nigeria and Nigerian clients, JTC, GD Taiwan Co. And on top of that, Francis, who introduced us all today, who's an existing client who has been bought off me about 2 years ago, has already taken handover, got a mortgage, and also got a tenant in her apartment as well, making rental income. And as well as that, I frequently fly over to Nigeria to do seminars for all my clients as well. But also good news for you guys is that I do pay a referral fee for every referral you give, and if they become a client as well. Okay, so it's just something for you guys to bear in mind of how I basically reward my clients if they reward me with introductions and everything as well. So on that note, guys, if there's no more questions, I'd like to thank you all for attending today. I really, really appreciate everyone's time. And I do look forward to working very closely with you guys moving forward and in the very near future. Okay?
Hey, thank you, Ira.
Thank you.
My absolute pleasure, guys. Thank you very much as well. Thank you. Bye.
Bye.